Okay, for this video, I wanted to go over the IRS Form 8804 and 8805. The 8804 and 5s are filed by partnerships when they have U.S. source effectively connected income that is being allocated to foreign partners. And when they do that, they need to withhold tax on those allocations and submit the tax to the IRS. So for this video, I've got a couple pieces in front of us. I've got the 8804 and 5s. I've also got a sample 1065 partnership return that we can look at. And then I've also got a slide here which outlines some of the rules and other information we need to consider. And then I've got a fact pattern that we'll look at, which will help us complete the 8804 5s and the 1065 return. Okay, so if we're starting at the top here, who needs to file this? Well, every partnership, whether it's domestic or foreign, that has U.S. source effectively connected gross income allocated to a foreign partner must file the 8804, report the allocation, and the withholding tax. Now, every foreign partner within that 1065, they get a K1, and they'll also get a Form 8804 if they have any allocation of ECI and any withholding taxes. Now, the reason I highlight gross here is because you can have scenarios where partnerships have gross effectively connected income, but they operate at a loss. They still need to file the 8804, right? So if we look at this example here, if we have a U.S. LLC that's engaged in U.S. trade or business, and it generates $250,000 in gross revenue and expenses of $300, the expenses of $300 mean that they're operating at a net loss of $50,000. Now, because they have a net loss, there's no withholding tax that needs to be taken out on the allocations to the foreign partners, but they still must file the 8804s because the standard is, do you have gross income that's effectively connected? They're not asking for net. Okay, so in this case, the 8804 must still be filed because the LLC had gross effectively connected revenues. Okay, very, very important distinction to make there. Now, what are the withholding tax rates? Well, they differ depending upon the tax classification of the foreign partner. So partners that are foreign corporations are subject to a withholding tax of 21%. This is the rate as of 2021. And then partners that are individuals, trust partnerships, they're subject to a 37% rate. Now, how do they come up with these rates? They use the top marginal tax rate for that given year. So for 2021, corporations are paying a 21% corporate rate. That's the top rate that they would pay. So that's the rate that's the withholding piece for these non-resident partners. Now, partners that are foreign individuals, they're subject to a 37% rate. And that's because 37% is the top marginal tax rate for this year. Okay. Now, let's talk a little bit about tax ID numbers. So a U.S. tax ID number is not required for the foreign partner when doing these forms. So you can give an 8805 to a foreign partner without a U.S. tax ID number. However, the U.S. tax ID number is necessary if the foreign partner wants to subsequently file a U.S. tax return and reclaim some of the excess tax. Okay, so what's an example of where you would want to do that? Well, remember here, 37% is the top rate. So if you have a foreign individual, let's say they want to file a 1040-NR, report their income, and then report the withholding tax, their effective tax rate might be a lot lower than 37%. Maybe after they report the income, their effective rate is only 17. That means they've got a 20% over withholding amount, so they can actually get a tax refund. But again, it's important that in order to be able to do that, the foreign partner would need an ITIN, or if it's a foreign corporation, it would need an EIN. And that information should be reflected on the 8805 as well. So let's look at our example here, and then we'll start looking at the 1065 and the 8804. So in our example here, we have Fake Consulting Group LLC. It's a Delaware LLC, and it has two partners. We have John, who owns 60%, and then we have Frank, who owns 40%. Now, John is a U.S. citizen, and he lives and works from Florida, while Frank is a citizen and resident of Cayman Islands. Okay, so Frank is going to be a non-U.S. tax resident for federal income tax purposes. He is not working in the U.S. Now, the LLC rents an office space in St. Pete, and it has U.S.-based employees. John is the owner. He works from that Florida office, but Frank, being in the Cayman Islands, he works remotely, right? So he doesn't come to the U.S. He doesn't work from that U.S. office. He works remotely. Now, given the activities of the LLC in the U.S., it is going to be considered engaged in U.S. trade or business, and it's going to have U.S. source ECI. That's because of the U.S. employees, the U.S. office, John's physical presence in the U.S. So the reason why that's important, because now Frank, being a non-resident partner, he's going to be subject to this withholding tax regime because we have ECI being allocated through a partnership to a foreign person. Now, the LLC's financial figures, we kept them very simple here to make the math easy for us. So they had this much in revenue, total expenses of $28,150. So if we subtract the two, we have net ordinary income of $100,000. Now, the income is going to be allocated 60-40, right? John gets 60%. And Frank's going to get 40%. Now, because again, Frank is a foreign partner, the LLC is going to have to withhold tax on the $40K of income and then report all of that information on 8804 and 8805. Now, note here that the 8805 is only going to Frank because he's the only foreign person. John's a U.S. person, so he doesn't have any withholding tax on his income. He just has to use his K1, report the income on his 1040, and he pays tax that way. Okay, so let's look at the 1065 and the 8804. So here's our partnership return. Very simple partnership return. We've got the name of the company, address, EIN, and then here we have the revenue figures and then the expenses. So there again is our $100,000 of net ordinary business income. That's what's going to be allocated to the partners. So Schedule B also has some information that we need. All right, so if we scroll down here, to question 14, we have, does the partnership have any foreign partners? If yes, enter the number of 8805s attached. In this case, yes, we do have a foreign partner, and we're going to attach one for Frank. Okay. Now let's start looking at the K1s. Let's go through here. Okay, so this is the K1 for John. Now remember, John's the U.S. person. So we have John here, general partner or LLC member manager, and he's a domestic partner. Right, and so he's got his $60,000 allocation up there. And then again, there's no withholding tax for John's share because he is a U.S. person. Now what about Frank? Well, let's look at Frank's K1. So we have Frank, right? We have Frank's name, his address. He's an LLC member manager, right? Because he's an owner that actively participates in the business. So it's appropriate to have member manager there. But he is a foreign partner, right? So he's not domestic in this context. And type of partner is an individual, right? That's important too, because remember, who is the income being allocated to? Is it an individual? Is it a foreign corporation? Is it a foreign partnership? That's going to determine the withholding rate. Okay. Then up here, line 1, we've got Frank's ordinary income or loss. So now, where does this information get reported on the 8804 and 5s? Well, Frank, within his K1 here, he should get a 8805, right? So 8805, we have foreign partner name, ID number. Now here, if the foreign partner doesn't have an ID number, you can use foreign US as a placeholder. And that field will be accepted when you e-file. Okay, so that's the appropriate field to use when you have foreign persons without a US ID number. Now, if Frank had an ITIN, you would use his ITIN. If this is a foreign corporation, you would use the foreign corporation's EIN. Or again, foreign US if they didn't have one. Then we have address, type of partner, country code of partner. Frank is a Cayman Islands resident, so CJ is the code for the Cayman Islands. And then down here we have partnerships ECTI allocable to the partner. Frank's being allocated $40,000, right? That's the line 1 amount. And then the tax that's going to be allocated to Frank is going to be the entire amount. This will represent 37% of $40,000, right? Because remember, being allocated to an individual, so it's a 37% withholding rate. Now, if we look at the 8804s, we'll see how these totals end up on the 8804. So here's the 8804. You only file one of these per year. You file an 8805 for every partner that's being allocated the ECI, right? That's foreign. So we've got one 8804 here, name of the partnership. The partnership is the withholding agent in this context, so you can put same. You don't have to enter the information again. Now, if we get down in part 3, the two fields that you're most often going to be seeing and working with are 4A and then 4E. So 4A, total ECTI allocable to corporate partners, right? So we have to report the corporate amount up there, if any. In this case, we didn't have any foreign corporate partners. So then 4E, total ECTI allocable to the non-corporate partners. So $40,000 is the amount being allocated to Frank as a non-corporate foreign partner. Now, the reason why you have to separate these two is because of the tax rate calculation on the second page, right? So the gross 1446 tax liability, 21% times the corporate partner amount, 37% times the non-corporate partner allocation. And again, that's the $14,800, which is 37% of $40,000. And then at the bottom here, we have the balance due. Okay, so in this case, the partnership didn't make any estimated payments during the year, so the entire balance due is going to be owed with the filing of this form. If there were estimated payments if there were estimated payments being made during the year, then you would have them reflected up here, and then that would cut into the balance owed, obviously, and so there would be a true up or even maybe a refund at the end of the year, depending on how much you paid in. Okay, now, the one thing I want to just highlight again here is the U.S. tax ID number. So the U.S. tax ID number, if you are going to apply for an ITIN, wait to file these forms ideally until you have that ITIN. And the reason for that is if Frank files this now, and then later he gets an ITIN and he decides to file a tax return to reclaim some of this tax, the IRS is not going to be able to find it. This is one of the limitations with their system. When this withholding tax credit is going to be allocated to Frank, they need to be able to put an ITIN number in here or else they'll never be able to trace it. I see it happen time and time again, and so what ends up having to occur is the partnership has to refile the 8804 and 8805s as amended. So you file corrected 8804 and 5, you update the 8805 for Frank's ITIN once it gets it. And then once that's processed, then they'll be able to trace this in the system and Frank can go ahead and file his 1040 NR. Okay. Now, the one last thing I want to touch on also is the withholding tax computation amount is, again, it's on the ordinary business income amount being allocated to the partner. It does not matter that Frank didn't receive any cash distributions during the year. Whether he did or did not, the tax is calculated on the line 1 ordinary income allocation. It's not the amount of cash that Frank actually gets. So that's why it can be quite costly for a lot of non-residents because, you know, they're paying tax and they're not receiving any cash from the partnership because all of it's going to the U.S. government. So, again, very important thing to keep in mind. You're calculating it based on the allocation of the net profits, not on the amount of cash being distributed to the foreign partner. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below. And I look forward to seeing you again on the next video. Thank you.